Let's begin the show with a quick update on what's happening with COVID-19 across the country. We're hitting nearly 2 lakh daily COVID cases across India. 1.94 lakh is the latest figure cross country in the last 24 hours. Delhi has seen a massive jump up to 27,000 cases today, and that's the figure that came in this evening. Mumbai, which had seen its numbers plateauing over the last 3 or 4 days, has seen a jump again with about 16,000 cases. Remember, there were close to 11,000 cases in Mumbai. Test positivity rates have gone up across the board, though experts do explain that's also because of the new testing guidelines, which now say that asymptomatic contacts of those who have tested positive need not get a test. So if largely symptomatic people are getting tested, the likelihood of them turning positive or testing positive is higher, which could explain the jump in test positivity rates. The big message coming in from the Health Ministry in its briefing today continues to be that don't treat COVID as a fever just because the symptoms seem to be relatively mild. We still have to keep our guard up. Well, with that, let's turn to the lead story this evening, which is all about the Q3 earnings. Infosys, TCS, Wipro, all three big numbers coming in on one day today. So it's been a hectic day for those who track this space closely. Here's the key takeaway. So Infosys surprised positively with increasing its forward guidance upward. So they've gone to nearly 19.5 to 20% for their forward revenue guidance. This is from about 16% last quarter. That's expected to cheer the markets. TCS was a mixed bag with profits coming in at about 9,806 crore rupees, with margins seeing some pressure. But no doubt the investors will be enthused with the kind of buyback they've announced at 4,500 rupees per share. They're spending around 18,000 crore rupees, and that's great for investors. Wipro, in comparison, seems to have not done too well when compared to the other two. They've missed estimates, at least when it comes to revenues in constant currency terms. Attrition is the big theme across the board, though. Infosys and Wipro more so, but all the three big IT companies are facing big attrition rates. My colleague Anisha is now joining us with more. Anisha, if I were to ask you to compare the three, how do they stack up?
Well, yes, to summarize the earnings of the day, Infosys was a hit, TCS was a bit of a mixed bag, and Wipro was a miss. Let me start with the Infosys, wherein the positive was that the revenue guidance for FY22 was revised upwards to 19.5 to 20% versus 17 to 18% expected. The revenue growth this quarter was a strong beat versus our expectation. The constant currency revenue grew by 7% versus expectation of 3.5%. And even if you look at the internals in terms of the margins, they were strong at 23.5%. The management commentary is strong with respect to demand outlook. They talk about how demand can continue beyond FY22, how the pipeline is the strongest ever, and even in terms of attrition, which jumped up a tad bit this time to 25.5%, they say that they are seeing signs of it stabilizing and bottoming out. So that's a bit of positive. Moving on to TCS then, wherein it was a bit of a mixed bag. And I say that because the top line growth is strong. The constant currency top line growth came in at 4% versus our expectation of 3%, but the margins were a miss. The margins declined by 60 basis points sequentially, and this is a bit steeper than what we were expecting. However, the management does indicate that this was on account of talent retention. Apart from that, the reason why the stock price will be supported would be the buyback announcement, which is coming at 18,000 crores at a price of 4,500 a piece, which is at 17% premium to the current market price. Lastly and quickly talking about Wipro, it was a miss because the top line growth in terms of constant currency came in at only 3%, and this compares to 4.5% what we were expecting. The margins are steady at 17.6%, but even if you look at the guidance going forward for Q4, the number came in at 2 to 4%, and this is broadly in line with the street expectations. However, on deal wins, they were quite positive. They talked about how the win rate is improving, but overall, for the sector, it seems like TCS and Infosys have performed better than Wipro in Q3. Back to you.
50 billion is definitely a possibility. Whether it happens in 26, 27 or 30, that's the only question. And I think it's too premature for us to be able to take a call on it. But the way we see it is that there is demand out there. And what is required for that is a significant focus on our customers, a significant focus on talent development, and making sure that our partnerships are in place to move the ecosystem and to participate in the ecosystem very positively.
We are staying focused on improving our secure borderless workspace model and architecture, as well as our 25 by 25 model. We are staying committed to that. Some of our leadership team, when I think the next level of leadership team have started to attend office, and we have given them the flexibility to decide when they would like to be in the office, when they choose to work from their home. But the intent is to really see how they would like to operationalize the 25 by 25 operating model, always prioritizing employee safety. I think, the business continuity plans and the 25 by 25 operating model, these two will be rolled out or will be defined at pretty much at a client level and a project level. And then that will constitute how people will come and return to office, from where they will work, how they will work, all of that. So we are staying committed to our 25 by 25 working model.
Our growth has been accompanied by resilient operating margins at 23.5%. We've delivered these margins while we have kept in the forefront our focus on our employees with increased compensation and benefits. Our digital business grew by 42.6% and now is 58.5% of our overall revenues. With the strong momentum in the business and the robust pipeline that we see, we are increasing our annual revenue growth guidance, which was previously 16.5% to 17.5%. We're increasing it to 19.5% to 20% in constant currency terms. Our operating margin guidance remains 22% to 24%.
Order book, which is, as you know, the best measure of the demand environment, has grown 27% on a year-to-date basis in terms of annual contract value. In fact, our bookings have been the highest ever. In Q3, we saw a 50% year-on-year increase in the total contract value order booking for deals in the 10 to 30 million range. On operating margin at 17.6% in Q3, we are ahead of our stated range of 17 to 17.5%. Now, in Americas too, we grew 33% year on year with strong growth across BFSI and manufacturing. The order book in terms of annual contract value grew over 47% year on year. This was definitely led by good overall bookings in the bucket of $10 to $30 million. Now, our European business has delivered an outstanding year-on-year growth of 38%.
And Aniket Pande, lead analyst, IT and Telecom at Prabhudas Lilladher, and Omkar Tanksale, senior research analyst at Axis Securities, joins us on the show today to really understand what the big takeaways are from the first three set of numbers, and the big three, that too, from the IT pack that have kickstarted the third quarter earnings season. Thank you to both of you for speaking with us tonight on the India development debate. Aniket, let me begin with your take. A short while ago, my colleague Anisha just broke it down for us, and she said it in one line. If you were to explain what happened today, Infosys was the hit, TCS a mixed bag, and Wipro not that great relatively. Would you agree with that?
Yes. I completely agree to what she said before, and she has summarized it quite well actually. So Infosys was a complete home run in this quarter actually. The most positive KTA was its upgrade in guidance actually. So guidance upgrade, this was no one estimating actually. So we were estimating a guidance upgrade of around 18 to 19% in this quarter, but it came higher. But it has beaten that estimates also. So for FY22, actually for Infosys, our EPS estimate would be easily raised by around 4 to 5% for FY22, and similarly for FY23 also at at around 3-4%, our EPS estimate would be increased. Now coming to Wipro, actually, yes, Wipro, there was a miss on revenue. Actually, their margin performance was quite resilient actually. But if you look at their deal wins, actually, their deal wins were quite robust in this quarter also. Their ACV also showed a growth of around 27% on a Y2 day basis. Even in this quarter, we have seen extremely strong employee addition when it comes to Wipro. Okay. Secondly, I believe that consulting revenues are back with revenge. We saw that similar trend happening in Accenture result also. So going forward, actually, I believe that Wipro can deliver better growth from this number what he has delivered. Secondly, guidance is also quite in line with our estimate, which is at around 2 to 4%. Okay, so tomorrow if there is a dip which comes in Wipro, actually investors should be eager to add that dip.
Okay, let me take it across to Omkar. Omkar, what would be your key takeaways from the numbers?
Yeah, I'll definitely give a bet and the marks to the Infi as they have delivered wonderful results and showed the strong growth across the revenue as well as in the deal wins. The one must see that there has been stabilizing in terms of margin. The margins is quite of worry. Secondly, I give the marks for the execution to the TCS because at this size, it will be difficult for them to manage with such kind of an employees and the employee additions and such kind of projects that they have. But the TCS continue with its net additions as well as the order book remain robust. The execution remained very positively. So I'll give them marks for the execution. In terms of Wipro as well, the demand scenario has been looking strong. Yes, they have not delivered with as compared to TCS and Infosys, but I think they are in line with the expectations and going forward they will deliver. Firstly, as a sector as a whole, one must see that this being considered as seasonally soft quarter, but they have managed to deliver the robust growth across Q on Q and across uh, year on year. So one must see that being and the ramp up has been the deal ramp up has been his momentum is very high. So going further, the demand scenario is likely to be remain robust as far as my point of view is of concern.
Yeah. Omkar, give me the big picture. The last couple of years has seen a massive COVID tailwind for IT companies across the board and, of course, the big three as well. Do you see that trend continuing, and will we see that in other companies in this space and not just the big three?
Yes, definitely, definitely. What happens that it will be very difficult for any of industries, not across any particular sector like BFSI, but it is very difficult for accessing the data from the remote places. The lockdown and the restriction on the travel will actually prove as a boon for the industry as a whole because the demand for the cloudification of the data has been grown up further. So people have started spending across verticals. We see the digital transformation, the cloudification of the data, the demand for the artificial intelligence, machine learning has gone up multiples. And the Gartner also issued a strong guidance and growth in the demand scenario for the such kind of services. So that's why we see an uptick for the demand for such kind of services rather than traditional ADM services or such kind of services that they had. But the demand for such kind of a services has been grown in multiples and likely to be continue because there is a lot of data mining is happening. These
Yeah.
services companies are penetrating the horizontals. Then they mine the data more and the automation is likely to be happen more. So it will take a time. So it will one should give the time for a time horizon of 2 to 3 years from here on, so that the complete conversion of this cycle will happen.
Aniket, obviously that's that huge demand for tech solutions for companies across the board. that is also fueling the Great Resignation. I spoke about it in the opening of the show. Do you see that as a big problem? I really wonder, as an analyst, why is it an issue of concern if these companies are seeing such high levels of attrition? What is it about it that you think will directly impact the bottom line?
Yeah, basically, I would like to give a bit detailed answer to this actually. So basically, cloud isn't completely cloud transformation which is happening right now. Right now, it's completely architecture in nature. It's not like this transformation wasn't happening into pre-COVID levels. This was very much happening when COVID wasn't there. COVID came and catalyzed this transformation actually, and the demand which was going to come into a decade actually, now that demand and now that aggressive ramp up is happening into next 3 to 5 years only. So basically, the thing is that demand is extremely aggressive right now, and to source that demand, you require a proper set of digitally skilled talent also. Okay. Similarly, since last 4 quarters, we have seen massive net count addition in across all the IT companies on board. Okay. Similarly, out of that, around 50 to 60% of their employees they are quite aggressive in adding freshers also. So going forward from here on, what I see is that whatever attrition is happening right now, attrition is more happening on the freshers front actually. On lateral front, attrition is not that higher, because of which there is no as such big execution risk which can come to these companies actually. And I see 4Q as a peak for this attrition and supply side issues actually. Going forward in FY23, I see basically easing out of your subcon cost also. Okay. Similarly, right now, again, Omicron is back actually. Okay. So I believe that we will get a bit of relief when it comes to your traveling cost also. Even Wipro management clearly mentioned that for next 4 weeks, they have completely shut down their offices. Okay. So I think savings from work from home and work from anywhere will continue actually. A bit of discretionary cost would be back on the table actually after 2Q onwards. But I believe that revenue growth tailwinds are quite strong right now. And whenever these IT companies have strong revenue growth tailwinds with them, these companies are able to defend their margins really well. We have seen that resilience performance in margins this time in Infosys and Wipro both actually. Yeah.
Well, it's going to definitely be a matter of concern for them, but an interesting story to keep tracking. Thank you so much, Omkar and Aniket, for joining us on this big story that we're tracking this evening.